information, guys. Jabu sells his product at 60 Rand per unit. Jabu used a material cost as basis to allocate the fixed manufacturing overhead. Over and under applied, guys, are written off against the cost of sales in the year they are incurred. Net actual fixed manufacturing overhead were 105,000 in 2016. In 2017, 110, guys. Please make sure you don't forget this. And then the variable cost vary according to the number of units sold, and the variable cost increased with 5% at the beginning of 2017. Jabu also increased the sales commission to 6%, and the selling price per unit increased to 70 Rand per unit. Assume all other financial data budgeted and actual remain constant during 3 years. Okay. Last week, guys, we've been prepared this one, and then here, guys, is the cost 2016 cost. Here is the 2017 cost. And then this one is the direct costing. Today, guys, we are going to do what? To do the absorption costing. How many units did we sell, guys? We sold 180 units. With how much, guys? 70 Rand. Because today we are doing what? Absorption costing for 2017 is equals to 70 Rand, because they said the selling price is going to increase to 70 Rand. Now, guys, we're going to calculate the opening inventory. Remember, guys, the opening inventory, let's go to the statement of the unit. The opening inventory, guys, we have how many units? 1,800. Remember, this 1,800 is the opening. It was the closing from where? From 2016. Always, guys, on the opening, for variable cost, we are going to take the one from 2016, the variable cost. If I'm fast, guys, just tell me to slow down if we are together. And the fixed cost is going to be the one from 2016. This. This one, the total is this plus this is equals to this. And then for produced is how many units, guys? We produced 111,500 units for produced. And then now, guys, check here, guys, because this one, it falls under where? 2017. I use this one, guys, because it falls under 2017. Here I use 30 Rand because this opening, it was the closing from 2016, where the variable cost was 30 Rand before the increase. Then here our fixed cost is 10 Rand 0.8. Guys, I do mistake. Let me put this
psychological issues, cognitive challenges, finances, anything in the mind volume.
Even if you're in
Mabela,
London.
Why move?
Especially COVID-19, we see a lot of
We're together, ne, guys. Here, guys, we're going to take the units of closing. Closing units was 1,500, ne? And then the variable is equals to this, and the fix is equals to this, ne? Okay, guys. Here, guys, ne? To calculate under and over applied, guys. I hope all of us, guys, we know the formula, ne? Is equals to actual fixed overhead less the applied, ne? Here, guys, I'm going to explain this 115,920, guys, ne? Remember last week, guys, how did we get this amount, guys? Here, there's a formula, POR times, to get this fixed overhead, guys, is equal to POR times actual. Is what? Is the formula of applied. To get the fixed, our fixed, guys, it was applied, ne? It's based on the applied of direct material, guys. To get this one, this is the actual one, and this one is the POR. 12,60 times POR, we get what the applied, ne? And then to get 115,920, to get this one is the total applied, guys. This one is our total applied, ne? And then here, guys, we're going to take the fixed cost. Where can we get the actual fixed cost, guys? From the additional information, guys. Let me zoom my question. From the additional information, guys, we have been given the fixed cost, ne? For 20, the actual fixed cost were 105 in 2016, ne? And then 110 in 2017. This one is the actual fixed cost, guys. We're going to say 110,000, ne? less the actual one. The actual is how much? The applied, less the applied. Actual less the applied. Are we together, guys?
Yes.
Let me do this. Let me do this. Okay, guys, if you check, it's over or under applied, guys?
It's over.
It's over applied, ne? And then here, guys, if you read, the over and under applied are written off against the cost of sales in the year that they are incurred. Now, guys, we're going to do what? We are going to adjust, ne? When they say the under or over applied, they are written off like this. In this way, we apply what they've said here, ne? And then now we can calculate what we can less cost of sales, ne? This.
Sorry. Yeah, before you continue, I want to ask with regards to the applied manufacturing overheads, the applied fixed manufacturing overhead, is it always the case that we have to take the fixed cost under produced units?
Sorry, repeat again.
I'm asking if is it always the case that we have to take the fixed costs under produced units for the applied?
Yeah, we should take the one that is under the produced, under applied, because this year, this year, like we have produced this unit, and then this 10 rand is the applied, is the one that is the fixed cost, which is applied.
Oh, okay.
Yeah. The applied, ne, remember, the applied, ne, in the applied is the cost that incurred, is the fixed cost that incurred during the year, during the current year.
Okay.
Yeah. In a simplest form.
Sure.
Ne?
Yeah.
Here, guys, we calculate the cost of sale, ne? And then this thing, guys, is like is continuity, guys. Like if you still remember the work from first year or the revision, remember over and under applied. Sometimes, guys, remember if it's going to be an under applied, which means here is going to be positive, which means you're going to add back to the cost of sale, because now it's over applied, which means we are going to less from where? From the cost of sale. Ne? To get this one, we're going to take opening plus produced minus closing minus under applied. This amount, guys, 481, 160, it represents the cost, our cost of sale. Are we together? Hello?
Yes, we understand.
Okay.
Hey, can you please zoom in?
Sorry?
Can you please zoom?
Now you can see now you can see.
Yeah, it's fine. Thank you.
Okay. Okay. To get your gross sales minus this is equals to, this is the gross profit, net. And then here, guys, we're going to less other expense, guys. This one, guys, is going to be copy and paste, guys, because we already calculated last week, guys. This one we already calculated last week. Hoping all of us we still know how to get this amount, guys. If you forgot, I'm here, guys. I can explain how did we get this.
Please explain.
Okay. Let me go back here. Ne? Last week, guys, ne? For under commission, guys, for this one, to get this one, guys, let me read here. The commission this year, ne? From at the beginning of 2017, all variable costs is going to increase with 5%, ne? And then Jawu also increased the sales commission to 6%. Ne? Let's from 2015 to 2016, which means the commission was 5% of what? Yeah, of sales. Ne? It was 5%. This year, guys, how did we get this commission, guys? How did we get this commission, guys? It is revenue. Revenue is this amount, guys. Revenue times 6%. If you can see here, there's a calculation on the side. This times 6%. Your sales, your revenue times 6%. You get this one. Eh? And then here, guys, I'm going to explain how did we find the variable admin cost. Ne? From here, guys, the variable admin cost, ne? Variable admin cost, guys, it was how much? It from 2015, ne? From 2015, guys, the variable admin cost. Let's read from the information, guys. The variable admin cost vary according to what the number of units produced, which means the variable admin, it vary according to what the units produced. Ne? Here, guys, they produced how many units, guys? This is the units produced. Ne? If we take this 36,000 divided by 10, it varies with what? According to the number of units sold. Ne? It varies with the units sold, guys. Okay, the unit sold is 10,500. Ne? If you take this 36,000 divided by 10,500, it's going to give you 6 rand. Because they said from the beginning of 2017, the variable cost will increase by how much? By 5%. You're going to increase this by 5%. You're going to get 6 rand 30, ne? And then 6 rand 30 times units produced. How many units did we produce this year? We produced how many? 11,500 times 6 rand 30. Just punch on your calculator if you don't get this amount. This times the unit produced, which is 11,500, will get this. Please, guys, don't forget the steps. You are covered, my sister.
Sorry, how did you get the 630?
It increased this 6 rand by 5%.
Oh, okay.
Yeah.
Thank you.
Sharp. 6 rand times 105 divided by 100 is equals to 630. Or you can say 5% of 6 rand, which is 30 cents plus 6 rand is going to be 630. Yeah? And then the fixed marketing, the fixed marketing is equals to this. And then we have what? Fixed admin, né? We're going up, fixed admin is equals to 70. Né? Here, guys, né? We are not including the fixed this amount, guys. Why? Because this amount is here, guys. We have calculated this. We have used this amount to calculate what over and under applied. Né? That is why under this absorption here there is no fixed manufacturing cost of this amount, guys. Please be careful of this, guys.
Sorry.
Hello, yeah, I'm listening.
Yes, I want to ask, you said we don't use the 11, is it 110,000, ne?
Yeah, we can't include 110 because it's already included where? Here, under calculating, under applied or over applied, under or over applied.
So if it was not included, we were gonna include it under other expenses.
Yes, yeah,
Oh, okay,
yeah.
okay.
Here, guys, is our net profit. Ne? Here, guys, ne? Listen, here, please, guys, make sure you know this format. Ne? Here we are going to reconcile. When we say reconciliation, we speak about this one. Ne? Here, guys, we're going to take the absorption costing profit, ne? Which is this one. Ne? And then we are going to add the fixed overhead in the opening inventory. Let's go. Where is the opening inventory? It's here. The fixed is this one. Do you see my screen? Then we are going to less what? We are going to less what? Less the fixed overhead in the closing inventory. Ne? Closing inventory, the fixed is this one. Ne? Ne? And then here, guys, we must get, if we take this plus this minus this, we should get the profit of direct or the variable costing, the profit of which statement of this one. You still remember this one, guys? The direct or variable costing, which we did last week. This is the same as this. We reconcile, which means now we are on the right track. Are we together, guys? Hello?
Yes, we are together.
Yes, sir.
Now, guys, I'm going to show you the second option. Ne? They can give you this one, like you can be given this statement, like absorption and the variable costing, and they say reconcile. Ne? This is the first option which you can reconcile, or they can ask you to use this second option. Ne? This one is the first option, is easy. Ne? You take this minus the opening inventory fixed minus this plus opening inventory less fixed inventory. Ne? You will get the variable costing profit. Ne? And then here, guys, is option 2. Is copy and paste, guys. Absorption opening inventory. Ne? Opening inventory. Here is the absorption costing. Ne? And then here is the direct or variable. The direct or variable opening is what? Inventory is equals to opening inventory is equals to this one. Ne? And then the different this less this is equals to, ne? And then I'm going to take the closing. The closing is equals to this one. Ne? In 10 minutes, which means our session will end in 10 minutes, guys. Let me make fast reconcile this within 10 minutes. Ne? Here, guys, I'm going to take what the closing of variable or directing or direct costing. Ne? Closing of direct costing is this one. Ne? And then here, guys, you give me the difference. This minus this. It give me this. Here, guys, I'm going to say this minus this. Ne? I get, let me check, guys. Okay, I will, let me do this. Here, guys, let's check. The profit, the difference in absorption profit and direct profit should give me the same difference, Ne? I'm going to take this one. Is my absorption profit, and then this one, it represents what my variable profit. Ne? And then the difference, guys. And this minus this. You see, guys, this one and this one is, I've still get the same thing. Is the second option. They can ask you on this, or they can ask you on this to do reconciliation using this format or this one. If you didn't understand, guys, I can explain this again, guys. The purpose of this, guys, remember, guys, this one is what we are looking for, whether it match, it reconcile. You see, if this minus this, I get this. This minus this, I get this. You see, I still get the same answers. If here, guys, this minus this, I get maybe 316, and then here minus this, I get 2,160, which means there's something wrong with my statement, the direct and the absorption, which means there's a error I should fix. You see, guys, it corresponds, guys. It match. Even here, guys, if you use this one, you still get what? In test, guys, they can ask you to get this amount. You can be given this statement and then asking you reconcile using the method in order they want to see whether you need to get this 2,160. Okay, guys, if there's no question, it's the end of our session.
So this session is going to be posted.
Sorry?
This session is going to be posted on Blackboard.
No, I'm using a YouTube account. I have my own YouTube account, so I can send a link on the YouTube account. Yeah, since guys I didn't take a register, please you can text me privately, because it seems like I have only 8 students. Text me privately, and then I will send you the link and the solutions, guys. And then you can ask me question anytime, guys. I'm here to help you guys.